What's up, guys? Now, welcome to another episode right here, and I'll be walking you through how you can use your head and shoulder, what does head and shoulder imply, how you can take advantage of head and shoulder, when to use it, when not to use it, what does it mean, how to identify them, and how to use it very, very effectively. Like the name says, head and shoulder, right? So, if you actually have head, your normal head, your human head, and we have shoulder, like the shoulder, your human shoulder, right? So we have it this way, and this is just basically what head and shoulder like means, the head and the shoulder. And when those the head and shoulder get formed, I'm going to be showing you everything in here, everything here right now, and I'll be explaining to you in depth like never before. Promise, I promise I'm going to break it down as simply as possible and how to identify them in any form economy, right? So now let me get to it. So I'll be breaking everything down for you. So yeah, in the market, the market moves in a candle and the probability of it forming a circle. So definitely you're coming in a triangular format, right? So that being said, this is just how the market head and shoulder look like. After you find it here, that you have it, you have one shoulder. Okay. So you have the left shoulder coming like this, the head, and this is the right shoulder. This is the head. Then you have the right shoulder coming like this. All right. So this is our example of head and shoulder, and we are having it as like hill, like mountain, right? Like mountain forming, right? And you need to understand how they form. So this joining is actually to guide you straight. This joining is actually to guide you straight in a way, and I'm going to explain why it's guiding people astray, because people actually think all the lines must join like this. The lines must be on a straight line, head and shoulder must meet. And that is really, really not right. Head and shoulder should not form like this. Most of the time, if you trade of head and shoulder forming like this, there's high probability of you missing out. There's high probability of you missing out. There's high probability of you missing out. There's high probability of you missing out on it, losing on it. So I'm going to be explaining to you, breaking it down for you to understand how you can utilize this head and shoulder so well. Right. So then this is how head and shoulder looks like, number one. Then the next thing you need to be conscious of is the first side is the left shoulder and the other side is the right shoulder, but we also have it as inverted, because this is just the normal version of it. We also have inverted version of it, whereby we have it this way, left shoulder, and we have head, we have it forming. This is the inverse version of it. So we have inverted head and shoulder, and we have the normal head and shoulder, right? Inverted head and shoulder and the normal head and shoulder. So you need to get that really, really right. Then the next thing I want you to get to explain, I want to break it down to you, is how this head and shoulder gets formed. Head and shoulder is a chart pattern. What does a chart pattern mean? A pattern that is formed by the movement of the chart. That we have candle pattern. So, but chart pattern is different from candle pattern. Chart pattern is the pattern that gets formed from the movement of the overall market, like how the market is moving and the movement of the overall market. So if you're seeing my video on market structure, and the basic of market structure, how to really trade. If you have not seen that, obviously, like you see the link maybe around this video or whatsoever. Then this is how head and shoulder get formed, and I've explained that in my market structure video. And if you have not seen it, you can watch that to understand it really well. So you all know that market structure is just moved in two movements. It has two movements: impulse correction, impulse, and all. So impulse correction, impulse. Then coming here, let me use this part: impulse correction, impulse. That is how the market moves, right? That's how the market moves on a norm, right? So now, head and shoulder happens to be a type of peak formation. It's a reversal pattern, right? It's a reversal pattern that comes up. It's a reversal pattern that comes up when the market wants to change, right? The market wants to change from either bullish to bearish or bearish to bullish. It's not that it is always like that. There are some times that we have double top. There are some times that we have double bottom. There are some times that we have head and shoulder. And there are some times we get to have both the head and shoulder and the double top. So the secret of you using your head and shoulder really well, effectively, whereby you don't get to be harmed by it, is I don't think people go online, pick head and shoulder, and go to the chart, look for head and shoulder, and pay. Why is it that you're not asking yourself the question? If these people really want you to make money, why are they making those things free? Why are they making those things free? They are free, but there are some hidden things you need to understand about it. So now let me explain market structure for you, like how head and shoulder gets formed. Head and shoulder is just an example of how peak formation gets formed, right? So let's see. Now we see the market going impulse to the upside, correction, higher high, higher low, horizontal. They are big grammar. They are still normal grammar. You just need to understand this. So impulse, correction, right? Impulse. Then instead of correction, we have it dropping down, forming another impulse. Because if it's a correction, it won't be breaking this low, right? And that's why I said if you go and watch my video if you haven't seen it. So then we have it impulse right there. Correct impulse. After impulse, we have correction. And after correction, we have another impulse. Right? After correction, we have another impulse. So most of the time, the correction is always coming on this shoulder. So this is a bullish movement initially. And after that bullish movement, what happens? There is a switch from the bullish move to the bearish move. So if you put your trend line, you absolutely see that yes, there's a breaking of structure, there's a breaking of trend line, or there's a breaking of structure, whatever you call it. Then breakout and retest, then slamming down, right? This is the last low right here that got broken. This is the last low that got broken, right? So then you should never take the head and shoulder that the neck are equal. That is why I'm saying that very, very image is leading people astray. That very image is leading people astray. Don't take head and shoulder that has both neck. This is the neck. This is what they call the neck. On the same level, there must be a candle closing below it. The right shoulder, if it's a head and shoulder, must be closing under it. Why? Because the head consists of impulse and impulse. Impulse and impulse. You can see impulse. Impulse is when a low or a high is broken. When a low or a high is broken. Look at it now. This is how, if you have not seen my video on that, go and watch it really fast. This is impulse right here. It broke this level. Impulse right here. Broke this level. So instead of having impulse correction, we didn't have a correction. We had another impulse breaking this level, because a head must consist of impulse, right? A head must consist of impulse. So right now, by the time we had a shoulder consists of impulse correction. Note that a shoulder consists of impulse correction, right? But a head consists of impulse. And if it consists of impulse, there must be a breaking of both sides of the level. And what I mean is breaking of this level. You can see the first head broke this level. The first head broke this level, right? Now the second head breaking this level right here. So what what that just means to you is the first impulse broke that level, and the second impulse breaking this other level. So this must happen for it to be validated as the original head and shoulder you should take. You should not take any head and shoulder having equal neck. Don't fall into that trap. Don't fall into that trap. It is a trap always. So by the time I want to take my head and shoulder trade, I'll be taking it right on this level. I'm taking my trade right on this level. Right on this level. And I'll be taking it all the way down. It's just a confirmation of a reversal. It's a confirmation of a reversal. And another way you can ensure that you're not taking head and shoulder absolutely on the wrong side is to ensure that, yes, this market has been trending for a long time, for quite a long time. That sometimes trap might come this way. Ensure, and if you want to take your entry around the side, I've given you tips on how to enter your trade, what to look for before you enter your trade. And if you have not seen it, I'll be dropping the video very soon. Or join my private Telegram group, which is absolutely free, and you'll be able to see how I'm taking my entry. I do a live analysis every single day, and also I teach you my approach, purely my approach, and I analyze 4 different markets: the stock market, the crypto market, the synthetic market, and the currency market. So I do that. If you want to get into that, you send me a DM or whatever. So yeah, this is that for that. This is a secret many people will not expose to you. A lot of people will not get exposed to this thing throughout like the first 3 years of trading. I didn't get to know this thing. The first 3 years of my trading, I didn't get to know this thing, right? So it will take you a long time, and you really get to understand the secret behind using this. So here is it, and this is the best way to use your head and shoulder. So for this one, inverted side, you must see it like this. You must see it like this. You must see breaking above. So let's get into the market and identify head and shoulder, and see why some failed and see why some did not fail. You get to see what I'm talking about. This is synthetic index, and if you don't know what synthetic is, watch my video. I actually posted a video on synthetic. So we are just going to be just focus on me using an example for now. Market structure is the same thing across all markets. The market structure is the same thing across all markets. So you don't need panicking like, hey, yeah, this one is synthetic. No. It's still the same thing across all markets. The same concept across all markets. See, this trade has been trending, right? And it actually changed structure to double top. So this is not what we are looking for right here. So yeah, this is what we are looking for right here. I told you sometimes you now have double top, sometimes you have double top, sometimes you have head and shoulder, and sometimes you have both head and shoulder and double top. And this is a perfect example of both head and shoulder and double top. This is double top right here, right? And this is head and shoulder also. Look at it. This is how head and shoulder form. Impulse. Let me get this. Impulse, correction, impulse. Then after impulse, instead of having correction, we had another impulse, breaking it. So, and after breaking it, what happened? We had another impulse right here, correction right here. Then what happened? We had an impulse going to the downside. So this is a typical example of head and shoulder. Why is it head and shoulder? We are having two double. It's not a must that it should be a single point. No, it's not a must that it must be a single point. It is not a must that it must be a single point. Everything right there is just a head. Everything above here is just a single head. It's just a single head. So it is not a must that it must be like a text or something. No, 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 no. Like I'm always saying that if in trading, it is always a point, not in trading, it is always an area, not a point. An area, not a point. An area, not a point. So you can see all those areas, they are head. All those areas, they are head. It's not a must, it must come in this thing. Like most of the time, everybody will just say that, yeah, look at like this right now. This is a straight line. But on the chart, on the real market chart, you can see that it's not forming a straight line. It's going up and down, up and down. Same thing goes here, right? Same thing goes here. It's not always coming in that apex pattern. It's just something that it just form. Okay, what picture is forming out of it? That is what we just concluded on. So this is the head and shoulder, and you can see this neck. It broke out. This neck, right? It broke. This one broke out. This neck. This the level right there. So breaking that level right there, you can see on that level, this is where the trade got activated. As I told you, it's not always the point per se. It is an area. It is an area, and you can see immediately getting to that point, what happened? Pam pam, the trade moved all the way downward. This is a typical example of a valid head. If I actually have it like this, I won't take the trade. Except you have a candle closing below it. That is when you can take the trade. Now, take a look at this. Head and shoulder is not always very, very big, bogus, or no, 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 no. It comes in its own way. Now, take a look at this right now. Look at this is impulse correction, impulse, then correction. It is meant to be an impulse, but this is a correction, then correction, again, then impulse. This is not, after getting there, what happened? It moved off really fast. And you just come and set your, yeah, head and shoulder. Yeah, it's head and shoulder. And let me just put my distance right here. And my stop loss goes above here. Then I put my trade from here to here. And I take my trade and I'm in profit. Look at what happened. It takes you out very, very heavily. Why? Look at this. Why? Double touch right there. Double touch. Double touch. Double touch, parallel touching. And I told you, when you want to take head and shoulder, do not hunt for head and shoulder that has parallel touching. It is risky. You don't want to risk your account. So that's for that. And I hope you got what I'm saying. Look at this is an example, another example right here. Don't impulse correction, right? This, then after that we had this, then this. No, one will have gone for this one. Let me see. One will have gone for this very one. This one. This is not a head and shoulder. It's not a head and shoulder. No. It broke out. It broke out. So the best head and shoulder to take is that one right there. So this is the example of it. And same thing goes to inverted head and shoulder. You just need to turn whatsoever you're doing. You just need to turn it all the way upside down to see what you're looking for. So that is that for that, and I'll be releasing more videos that is explaining this thing, breaking it all down for you, and you'll be able to take advantage of it. So yeah, I'm looking for inverted head and shoulder, but I'm not seeing it right here. I think let me go on boom. Boom. Please, boom, 1,000. Boom, 1,000. So let's see head and shoulder. Can we get head and shoulder here? Inverted head and shoulder. Let's check on hourly. This is a typical example of inverted head and shoulder, right? Impulse, correction, impulse to the downside, right? Then impulse again, and boom, what happens? You have the every push to the upside. Why do we have every push to the upside? It close above this guy, close above this guy. And where did it start from? Where did the trade activated from? On this level. So all you need to do is to take your trade this way, long, take my trade, shoot. Take my trade, shoot. Your stop loss does go a little bit above, below it, a little bit below it. Then you shoot your trade. You can see how valid this is and simple as this is. This is gold right here. This is gold right here. This is gold right here. And you want to take advantage of what is being shared. Go on all your trades. Go and check. Go and check on all your peers and see, identify head and shoulders with the concept I just showed you. The more you get familiar with it, the more you can make a lot of sense out of it. So yeah, that's just head and shoulder, and it's always at the end of a trend. It's always at the end of a trend, just to switch trend. You can see it has been going bearish ever since. This is a bearish trend, right? It has been going bearish ever since. Break out of the distance, come back to that level, then go all the way up. So with these few points, I feel you have been able to master or have been able to show you how to identify head and shoulder. And with these few points, I know so well that you'll be able to go on your chart anytime frame at all and identify head and shoulder, and you'll be able to utilize head and shoulder to profiting. With this one, I'm very sure your profit margin is going to skyrocket. Okay, maybe you have been having 40% before. I'm telling you, with these, you'll be having like 70% win ratio, 70% win rate. I mean, your win rate will actually skyrocket. You'll be having 70% win rate with these. And if you want to join my free Telegram group, just click around and you'll see where to join. Let's go, and that will be all for now. So catch you up later. Stay quiet.